Hey, it's Matt here, and this is another one of our Real Talk interview series. Today I'm here with Mark Moore from Supreme Lending. Mark, thanks for being here. Let's just jump right in. I was hoping you could just tell us a little bit about yourself and your experience with mortgages.
Awesome. Yes, I'm currently employed with Supreme Lending, and I've been doing this for 21 years. It's been good year so far. This year, even though with the COVID, rates being down, it's allowed for a lot of refinancing, and of course, purchase business stays the same. People are always looking to purchase homes.
So you've seen a lot in 20 years. You've been in Dallas the whole time for the 20 years,
21.
Right? Okay.
Yes.
Yeah, so you've seen a lot of the market. I want to jump in with a couple common questions that I get, because we've worked together a lot, and so you know I work with a lot of buyers. I get a lot of the same questions over and again, so I want to jump in with some of those common questions. The first one is, what is a pre-approval, and why does somebody need one?
Well, it's always good for the buyer to get pre-approved, basically to get their financing in order and to be able to show the sellers that they are a qualified buyer and they're ready to buy, and that keeps from having any type of surprises at the end of the transaction.
So let's say I'm a buyer, I come to you and say, hey Mark, I want to get pre-approved.
Right.
And then what happens next?
So the first thing we'd do is I would take a loan application.
Okay.
That would be pulling credit. It does start with that. You have to have a certain credit score in order to qualify. And once you have that, then the next thing is we're going to discuss income.
Okay.
And once we know their income, it pretty much can tell us what amount they can qualify to go purchase.
So there's kind of two components you're looking for. There's the credit score and the income.
Correct.
And then you can combine those two and come up with an amount.
Right.
More or less.
Exactly.
Okay. How long does that take? I think people think it takes a long time to get a
No,
pre-approval.
absolutely. No, in just 15 minutes.
Okay, so quick call, 15 minutes, and then you'll generate the pre-approval. I know also with some of our clients in the market right now, you've actually called and talked about how qualified the buyer is. So thank you for that first, for helping sellers or buyers win their multiple bid. And then you'll give a copy to the buyer and a copy to their agent and
Correct.
Move right on.
That allows that agent to, of course, pass it on to the seller's agent to show that they're qualified.
Obviously, sellers don't want to tie up their house with
Right.
somebody who can't actually afford to buy it. Buyers will ask me, well, how much money do I need to put down? Maybe you could talk a little bit about down payment.
Okay, well, let's talk about various programs.
Okay.
There's several. 3, which would be government-backed type programs, which would be your FHA, your USDA, and even VA for the veterans.
Yeah.
Of those 3, FHA requires the least amount of money to put down, which is 3.5%, and then the other 2 you can get in with no money down.
No money is pretty impressive, but for most people, probably they're going to be, I'm guessing FHA, is that generally more common?
Well, yes, that's normally the route they go because it takes little to get into the home as well as still get a good interest rate, and their debt to income ratios are much lenient, which allow for the buyer to purchase a much more home.
Okay.
And then out of those 3, then you also have a conventional or conforming loan, which is securitized by Fannie Mae or Freddie Mac. That loan requires a little bit more in down payment.
Yeah.
And of course, then you also have the private mortgage insurance that follows that as well.
Okay. Maybe you could talk quickly about private mortgage insurance and what that is and why does it matter to a home buyer or a borrower?
Right. PMI, what's that designed is to help the lender. It's like an insurance policy to if they were to get in trouble and couldn't make their payments and had to foreclose on that property. So it is a premium that the buyer would pay each and every month until they have at least 20% equity into that home.
Okay.
Once they have that, then that premium would stop.
And a lot of people, I think they need 20% down. What we've just covered is not really. But so I think people maybe came with that idea of 20% because of a PMI. Is that kind of a fair assumption?
Right, exactly. They're just whether they want to pay that or not.
Yeah.
That's again, and that's why a lot of people will choose going into the FHA program because the PMI premium is less than in a conforming or conventional loan.
Okay. Now, some people get down payment assistance, so they're almost putting nearly zero down. Can you talk just a little bit about
Absolutely.
how that works?
That's a very good program. In fact, what it is, it's still any of those programs I just mentioned, they can actually have down payment assistance following that, meaning that the buyer can get anywhere between 3, 4, or even 5% help, which would go towards the down payment and also closing cost.
So even still, people don't necessarily have to bring a lot to the table. I definitely think that's a common misconception.
Well, it's good too because the interest rates, they are a little higher, not much, but when you look at the big picture, a lot of times it's just a better program to go into.
Yeah, they can get a house.
Yes.
And if values keep going up like they have been, they're going to notice the difference right away.
Right.
Yeah, cool. Another common question, what do I need for my loan application?
Basically, just enough information for me to pull credit, which would be your name,
Okay.
current address, social, date of birth, and then of course, again, then we'd discuss income.
Okay, and then after they give an application, that's kind of when you do the pre-approval.
Right.
So all part of that quick process.
Right.
I want to shift gears a little bit to like once a person found the house and I've been able to get them under contract, we bring you the contract and then it kind of kicks off a loan process. Can you talk a little bit about what happens then?
Yes, once you send the contract to us,
Uh-huh.
of course that contract will tell our close date, purchase amount, down payment and all that. I then take that amount, input it into our system, get all the loan disclosures ready to be sent to the buyer, which they will sign electronically. It's just a preliminary documents that get signed in order for us to move forward. Once we do that, they sign those. We then send a link to them in order to pay for an appraisal, which then we send out an appraiser to have the home appraised.
Okay, and aside from paying for the appraisal, does the buyer have to do anything for the appraisal?
Absolutely not. Well, no, they would. I mean, they do pay for the appraisal, which in most cases that's $495 that they pay for up front, and then.
And then everything else is automatic.
Correct. Yes.
Okay, so you take all the information from them. They've signed their disclosures. I always call it homework. Like inevitably, there's some things that are asked for. What are the common things you guys are going to ask for?
Last 2 years tax returns. Last 2 years W-2s if they're W-2 employee. Then we also need a pay stub. Depending on how many times a month they get paid, we'll need that many pay stubs. And then we'll also need 2 months bank statements showing the funds that they have in order to close.
Okay, just a handful of documents.
Yes,
that
very
people probably should have anyway.
Right. Yeah.
And then you're asking that ahead of time just because you have that experience of knowing like, hey, we're ready to go once it comes in.
Right.
And some of your other lenders, I think, ask for it in delayed in the back end.
Yeah, we want to get it front because the more we have up front, the less issues or problems that we have when we get near the end. Right.
One of the things I want to talk to you about is what happens during underwriting. So I'm thinking they take all those documents and the loan application and then what?
Well, basically what happens is a lot of people don't quite understand how that process works. When I receive all this information, we then submit their loan application once it's complete through a portal through either Fannie Mae or Freddie Mac or our government FHA program in order to get an approval. That approval tells us the documents we need, which we pretty much already know. That's why I send the list out. And then all an underwriter will do is once we submit that file to the underwriter and all those documents, they're just verifying what Fannie Mae, Freddie Mac, or HUD has asked for, that we have the correct documents.
Okay. They're almost like going through a checklist.
Exactly.
It sounds so much more complicated.
Right. No,
but I guess when you break it down
most people
like that.
think that underwriter is, underwriting the file themselves and making all the decisions for the lender, but that's not true. They're there to protect the lender as well as protect themselves, and with, again, Fannie, Freddie, or HUD.
Okay.
And making sure the documents are correct.
Okay, interesting. What are some of the common mistakes that you see buyers making?
Well, really, there's only one, and
Oh,
one
really?
big one, and that's procrastination.
Okay.
They just take their time in getting us the documents.
Okay.
And depending on the situation or the scenario of that file, it could mean a big difference to what they tell me in income versus what they show versus what's actually being filed and shown to the IRS.
Okay.
And that can cause issues.
So one of the big mistake then is kind of like misrepresenting their,
Right.
or maybe misunderstanding.
Exactly.
their
They don't
financial
know,
picture.
but
Yeah.
yes, they take their time getting us the documents and then to find out that there's an issue. They can give me, like I said, a W-2 showing their income, but then they didn't tell me that they had multiple businesses. And when I see their tax return, which was delayed to me, then I find out, well, you're not quite making the money that you told me you're making.
Yeah.
So we really want to make sure we get everything up front. That way, again,
So keep people
have no
advice,
delays.
Be timely.
Yes.
Don't
for
waste
sure.
your time here. I
Right.
think the contract says many times, time is of the essence.
Right.
That's very true in mortgages
Very
as
much.
well. So really, in terms of making it go smoothly, it's just being responsive to the loan officer and getting them what they want in a timely manner.
Exactly.
Yeah, that's cool. What are some of the craziest things, or one of the craziest things you've seen a buyer do that gets them maybe into hot water when they're...
Probably the number one thing would be purchasing other items like a car, which
But
would
I bought a
change.
3-car garage. I think it needs another car.
Yeah, so that would be it. And then, of course, not letting us know, but at the end, we do find out. And then, of course, that could be, again, a delay or a big problem at the end. So we do ask and tell each customer to make sure that before they spend or purchase any big purchases, to let the loan officer know.
Okay. Yeah, kind of ask permission when you're in that window. Now you're with Supreme Lending, and I would consider you a local lender. A lot of people also think about mortgages from like a big bank, like a Bank of America or a Chase. Can you maybe compare and contrast why a person might want to go with a local, like advantages of a local lender like you?
Good question. I would say the biggest is the fact that that's what we do. We do mortgages. We do over $1 billion in volume each and every month. That's a lot of loans, close to 6,000 loans a month. Where each branch of these big banks like Bank of America or Chase, they're doing 1 or 2 a month in each branch. And then a lot of times those documents have to go to various states for approvals and such, whereas when you're working with a lender like ourselves, everything is in-house. So
you guys are right in Addison.
Correct.
Yeah.
And just everything will move much smoother.
Okay. Yeah, and like we talked about before, we can actually get a hold of you. And now you talked also, so that's one of the advantages of Supreme Lending specifically. Any other advantages that, since you're here, maybe you can comment on why Supreme?
Well, again, because we do a lot of volume, a lot of loans, we're able to offer our clients a much lower cost, better interest rates than most of our competitors. And if they do shop around, they'll see that it's a big difference a lot of times.
And people don't think about how that interest adds up. It's hidden away in the closing disclosure they sign at the final closing, but when you think about the life of the loan, a small fraction of a difference in interest can be tens of thousands of dollars.
Right. Exactly. They just see that monthly payment. They don't see that.
They don't understand.
Right.
What advice you could give to home buyers as they go through their process?
It would be to just make sure that they have, basically we say all our ducks in a row, right?
Yeah.
Have all your documentation, make sure it's presented in a timely manner to that loan officer. And once that is done, they'll find that it'll be a very smooth transaction.
Okay. Let's say somebody's in a hurry. How quickly can people close? Because you have some regulatory timelines.
Right. The fastest you can close is in 11 days. I have done those in 11 days. It's very rare, but I would say a good fast closing would be 15 days.
Okay.
We can close in 15
That's still
days.
pretty quick, 2
Yes,
weeks.
compared to what's out there, yeah.
Yeah, hair on
fast.
fire sometimes so. But so that's cool to know that people, if they're in that position and they're organized, like you talked about, then they could potentially close quickly.
Right.
Let's shift gears and talk about people who are not buying a house, but they own a house. I know we've seen a lot of it this year, but how should a person think about when it's time to refinance?
I would say the best way would be really is to find out how long they plan on staying in that home. You always hear everyone saying, well, if you don't save at least a point, it's not worth the refinancing. Well, that's not really true. It's really just based on how long the buyer plans on staying in that property. If you know it's your last forever home, then saving even an eighth or a quarter of a point over 20, 30 year period of time would be a savings, correct? Whereas if you know you're only staying in a couple of years, then you might not want to refinance because you're just not going to recoup the closing costs back in a timely manner.
When a person closes, do they have to pay for those closing costs like cash? Or not, when they're refinancing, do they have to pay for those closing costs as cash, or do those just get rolled into the loan?
No, when they refinance, other than their appraisal that most times they would have to pay for, everything else would be rolled into the loan.
Okay, so it's not like when you're buying.
So there'd be zero out of pocket.
Yeah, that's good to know. Well, we've kind of covered the full gamut here. Anything else that you think is worth covering? for our audience?
Well, one thing, I just want to make sure that everyone understands that between all these programs that were mentioned, the FHA, USDA, VA, and even the conforming conventional loans,
right? Yeah.
right, is that everybody's situation is different, so it really depends on their scenario to what program they're going to go into. If they don't have a lot of money to put down, then they may want to choose FHA. If they're putting a lot of money down, then they may want to go into a conventional loan. But again, it just really depends on each situation. So they do want to make sure that they have a discussion with a loan officer to know prior to, again, searching for a home, so they'll know what type of program to get into.
Yeah, I would piggyback on that. I think it's great prior to searching for a home. In our market, it's so easy for buyers to get really excited and sucked into their search. And then when they fall in love with the house, they've sort of skipped the step of talking to you and understanding their financing. And then it complicates things when we're scrambling to make an offer and get pre-approved.
I just think it's so important that, because again, everyone out there thinks that they have to have a lot of money to get into a home, and that's not true. You can have as little, again, as 3.5%, or even can take advantage of these down payment assistance programs that are out there that are designed to get people into homes, and they're very good programs.
Right. I think the other piece on that you said that's really cool is to remind people is talk to a real live person about your financing. There's a tendency now to want to just like do it on an app, but you're not getting customized advice that way. It's just sort of like spewing out something that may or not work, but it may not be optimal.
Correct.
So yeah, talk to a real person and understand the best route for you and take that customized approach. Yeah, well, Mark, again, I want to thank you for being here today. I really appreciate your time. And to our audience, I want to thank you for tuning in to this interview. I'm always here if you have questions about your home buying or home selling process. I'll make sure to put Mark's contact information in the description below, and I look forward to connecting with you in person soon. Take care. Thanks for watching today's video. Make sure to like, comment, and subscribe below. As always, if you have any questions, feel free to reach out to us. And in the meantime, make sure to check out some of our other videos featured on our channel.